Hey everyone, welcome back to another episode. So this is a continuation of our Colorado Springs Deal Blitz, and I've got Jenny Bayless back in the studio with me to do a deal analysis on a single family rental. And as a reminder, Jenny is starting to do an email list distribution service where she's going to analyze a handful of properties every week and just email them out to anyone on the email list. It's a great way to get to know the market, see what deals are down there. I'll be on there myself just looking at it as well. So if you guys want to join the email list, email me, Chris at Denver Investment Real Estate, and we'll get you on the email list. All right, Jenny. So this is a single family rental.
Correct.
Beyond that, I know nothing else about it.
Okay.
So give me the details.
Sure. So I just wanted to give everyone an example of what just a bread and butter single family rental would look like in Colorado Springs. I really like the smaller homes, the 2-bed, 1-bath, 3-bed, 1-bath. We've had great success with those, and this particular one is a 2-bed, 1-bath.
So you like the 1-bath or like the 2-bath stuff?
I do.
Any particular reason?
I don't know. It's just we've had really good luck, especially with the price to rent ratio, being able to buy it, and just had really good luck with tenants wanting it. I think it all depends on where you buy it too.
Yeah.
So these are, typically close to downtown is where we like to do it.
Okay.
And so this one in particular is really close to Memorial Park, which is a really nice park down in the Springs. There's a lot of stuff that's going on non-COVID times down there. So it's just a really great area for people and highly desirable.
And this is just a property that you just found on the MLS, right?
That's correct. Mm-hmm.
Great. And give us the breakdown of why you like this property.
Sure. So, as I mentioned, it was a 2-bed, 1-bath, about a 750 square foot sized home. It was listed for $195,000, which immediately piqued my interest because I noticed that it had instant equity built into it based on the condition of the photos and what I know comparables are selling for. There's a lot that is selling it for about $225 in the same neighborhood. So that was kind of attractive to me as well. I know we were talking about it a little bit before this, but I think that the sellers probably noticed the same thing in that I noticed after I had already performed this deal analysis at the $195,000 purchase price, they actually increased the list price by $10,000. So I think they got a lot of interest from everyone else who recognized that it was probably underpriced.
What do you think the fair market value is?
In its current state, probably in the low 200s, but just a couple quick lipstick adds to it, I think you could get $225.
Oh, really?
Mm-hmm.
Okay.
Yep.
And I don't know if you know this for this property or in general, but since you mentioned the square foot of the house, are there standard lot sizes? Denver's pretty standardized in their lot sizes. Is the Springs similar?
We don't have standard lot sizes down there, but I believe this one was in probably about 4,000 square feet. They're really good sized yards, and it's really attractive to people with pets, for sure.
Yeah. Okay.
Mm-hmm. Oh, and just a personal note, we own a rental property down the street from this house. So I'm partial to this, region as a rental property hotspot.
So another reason that it piqued your interest,
mm-hmm.
huh? So you've got the property description public remarks here on the MLS. I don't know if you want to read those or just give us the bullet points on here, but how did the listing agent present the property?
I think
in
that
their flowery language that they use sometimes.
Yeah, no, I think they did a good job with it. It says, "Come see this cute little home in a great neighborhood that is quiet and tucked away. The home features a spacious living room and an eat-in kitchen with a sliding glass door that opens up to the backyard. There are 2 bedrooms and a remodeled bathroom. There are likely hardwood floors under the current flooring, but not confirmed. Come and see this home that is waiting for your updates and personal touches."
All right. And then you've got I think these are your notes right here, right?
That's correct.
Okay.
Mm-hmm.
These are your notes for what you would do to get it written ready, right?
Mm-hmm.
All right, walk us through that.
So I would definitely give it an interior paint job, just freshen it up. I would also do a little bit of landscaping. I would not overdo it or anything, just kind of tidy up the yard a little bit, put some rocks down, kind of tenant-proof it in that regard. And then I would probably spend the most amount of time by sprucing up the kitchen. I would paint out the cabinets, put new laminate countertops down, and something that I've found a lot of good feedback in is just putting stainless steel appliances in.
Yeah.
Mm-hmm.
Yeah, we've gotten good feedback and usually a rent bump from those as well.
Exactly.
In-unit washer and dryer here?
I believe it was
Or at least hookups for it?
set up for it, yeah. But
Okay.
I would also put those appliances in there as well.
So yeah, what's your take on that? Because different investors and property managers are usually very, very opinionated on whether you provide the washer and dryer or you don't. So it sounds like you generally provide it, right?
I always provide a washer and dryer, and I also, in my lease, include a washer and dryer addendum in which both myself and the tenant sign saying, I recognize that this washer and dryer is the landlord's. We will not walk off with it at the end of this lease, because I know that those are kind of a lot of people's hiccups in why they don't like to provide washer and dryer.
Yeah, my preference is, because my fear is that they go buy some used or get some free washer off of Craigslist, and then some 30-year-old hose that connects to it, then it leaks and spills. I'd rather put a new one in there, have a new connection, and yeah, it's going to cost a few $100, but if it minimizes potential issues for water damage, that's my risk tolerance right there.
Absolutely. Or scratching up the floors, trying to install it. Just, yeah, I think it's just more attractive too for people to not have to worry about that.
All right, so we've got Joe's spreadsheet here that you plugged the rental numbers into. And again, if you guys want to see these numbers yourself, I know it can be hard to follow along as we talk about them. We try our best to talk about them. I try my best to enunciate the numbers and talk a little bit slower, but I know that's still challenging to follow. So click the show notes, and we got screenshots of the spreadsheet here as well. So walk us through this, Jenny.
Sure. So this is a single-family home, so we went ahead and just put a 20% down payment, which is pretty common for investment property loans.
Yep.
Purchase price $195, acquisition cost $5,000, which is pretty typical, and then initial repair costs, that is $10,000 is what I budgeted, and that covers the items that we mentioned: the paint, sprucing up the yard, sprucing up the kitchen. So we're all in for $55,540.
Okay.
And we can assume a 30-year fixed mortgage at about 3.75%, I think is a fair rate. You probably would even be able to get a little bit better.
Yeah, I think, we've closed some. They've been, like 3.3 to 3.5.
Mm-hmm.
So the numbers we go, hopefully, should even be a little bit better cash-on-cash return.
Exactly. And then $1,300 a month is a very fair rental rate for this particular unit once we kind of give it a little bit of a facelift.
Okay. What do you think, maybe you noticed, but if you just rented as is without your rent-ready facelift, what do you think it would rent for?
Probably, you could easily get $1,100.
Okay. But do you think with $10,000 you'd bump up the rents about $200?
Mm-hmm.
Oh, that's definitely worth it then.
Yeah.
Because you'll pay back that pretty quick, and then, yeah. All right, so standard 3% vacancy, and then going out to the operating expenses. What do you have in here?
So we have standard property management, 10%, monthly reserves for maintenance, 8%. Kind of what we've talked about in our other deal analyses is pretty standard across single-family homes. And then real estate taxes, $600, and property insurance about $800.
So those taxes, is that pretty standard taxes for down there for single families?
It is.
Okay.
It's very nice.
And your insurance is $800 a year?
Mm-hmm.
Okay, and that's just kind of standard landlord policy for, okay.
Yep.
Yeah, I'm just used to the Denver numbers, and they're usually, double those.
Right.
Yeah, okay.
Yeah.
And that's the most recent tax assessment as well after last year's increase?
Mm-hmm.
Okay. And then assuming here, it looks like based on what you have in here, just the tenant will pay for all utilities.
That's correct.
Now, for your single families down there, you have the tenant put Excel in their name, right?
So everything is done through CSU, Colorado Springs Utilities, and they have all of the utilities in one service except for trash.
Oh, really?
Mm-hmm.
So it's just one big utility company out there?
That's correct, yeah.
Okay.
So it makes things really simple. And then what we do is we have a landlord reversion so that if the tenant happens to not pay their utility bill that month, we get a notification. And then once they move out, it automatically goes back into our name and we're billed for the,
like when they call and give them their move-out date, it'll just automatically revert back to you?
Mm-hmm.
Okay, so they handle water, sewer, electric, gas.
That's correct.
Interesting. Okay.
And then you just have to call a separate trash company.
Okay. What's like the going rate for trash down there? Do you know?
It is about $60 a month.
Really?
Mm-hmm.
Okay.
Oh, excuse me, $60 a quarter.
Okay, that's really expensive. Okay, $60
yeah,
a quarter.
$60 a quarter.
Okay.
Yes.
Okay, that sounds okay.
Yeah.
So and you just have the tenants call it CSU.
Yes.
Okay.
Mm-hmm.
So CSU's in their name for water, sewer, electric, gas, and then they pay trash directly to whatever waste management or whatever trash provider there is.
Correct.
Okay.
Mm-hmm.
So you guys don't have Excel down there.
Nope, we don't.
I just assumed the monopoly extended the whole Front Range.
No.
Okay.
Yes.
And then I see nothing in here for landscaping and snow removal.
That's correct.
Tenant's responsibility.
Yep.
And is this property have irrigation or the sprinkler system?
No, most don't.
Okay.
My preference is to xeriscape the yards. Maybe have a little back area for pets.
Yeah.
But it's easier that way.
Yeah.
Because it is a good sized yard, and that would be pretty expensive to maintain.
Oh yeah.
Mm-hmm.
And you had good luck with your tenants removing snow and mowing the lawns and stuff.
Mm-hmm.
Great.
Yep.
And so going back to now, we're looking at the cash flow tab on the spreadsheet or screenshot from here. Walk us through these numbers.
Sure. So what we're looking at right now is a net operating income of about $10,924. Then when we subtract out the mortgage payments, we're looking at an annual cash flow of $2,254 a year. So that's about a 4.1% cash-on-cash rate of return, 5.3% cap rate. Just really standard numbers, in my opinion, for what I would consider a pretty easy investment. It's really straightforward. So it's just a really good opportunity to add this one to your portfolio and let it grow.
So we're looking at, as everyone knows, I'm a cap rate person. So we're looking at a 5.3 cap rate, which is, we buy single-family homes in Denver a lot of times. We're from anywhere from a low 4 to a low 5, maybe a mid 5 cap rate. Are you kind of seeing the same range down there for single families?
Now.
Okay.
Mm-hmm. Yeah, it's definitely getting tighter.
Yeah. Okay. And would you call this, is this like, I use baseball terms, is this a grand slam, a base hit, pretty standard? Hey, this is just a good rental that will build your wealth over the next 20 years?
Yeah, so I would consider it a walk.
Okay, a walk?
Yeah, it's just really straightforward. Yeah. Get on first base. I think it would be a great opportunity. And something I did want to mention is that I know your castle produces a lot of data that kind of attests to this as well. But the homes that are smaller in size and lower in price are appreciating at faster rates than more of the median-sized homes down there. So I think you'll be able to capitalize on that a little bit quicker than you would a larger home down there too.
Yeah, I'm guessing, are you guys having a lot of the same issues that, Denver, it has just, very low inventory for, entry level and affordable homes?
Yes, and that's driving up the price. And then from what I've heard is that the cost of construction to build entry level homes is just too high. So it's just not there because they're not able to construct those homes.
Yeah, so it's the same issues we have in Denver, just with land and all the other stuff is just too expensive. So they build, higher end stuff and actually make money. Mm-hmm. Okay, yeah, that's unfortunate, but it's the way it goes right now. Awesome. Any other things you want to mention, Jenny, before we wrap up?
No, I don't think so. Just as I mentioned before, I think it's a really, really good bread and butter property to own. Yeah. I like it.
Awesome. Well, if you guys, again, are interested in the Springs, let us know. If you want to join that email list where Jenny will start doing some deal analyses to help you understand the market, just shoot me an email. We'll get you all connected. All right, we'll see you in the next podcast.